The energy sector losing power. The XLE Energy ETF is down more than 10% in just the past month. And our next guest says now is the time to buy. Let's go off the charts with Chris Verrone of Strategas. Chris, what are you looking at?
Hey, Melissa, well, we're talking about energy here today, and I think this is really in the zone of where we want to think about calling this a very oversold condition and where we should be buying some of these stocks. We look for two things when we look for a good, deep oversold. Number one, we want to see an internal flush. And then secondly, we want to see an external flush. And both of those conditions are present right now. So I brought along 5 charts. The first slide that I'll just show you is looking earlier this week. We got a flush in the number of stocks making new 3-month lows in the sector. About 55% of the energy sector made a 3-month low this week. When you're in an uptrend, energy is in a longer-term uptrend. When you're in an uptrend and you get these surges and new lows, it typically means you're pretty close to a good tradable bottom. You're in the zip code or you're in the ballpark. We got that condition earlier this week. But the second thing we look for, and if you go to the second slide, we look for an externally oversold condition. So we got a 14-day RSI kind of in the 30 neighborhood this week. That was the first oversold condition for the XLE since September. So we have both that internal flush and that external flush. That's a very good combination, particularly when so many of the constituents are still in long-term uptrends. And that's really our third chart here. What I want to show you is this bottom panel. 90% of the constituents of the XLE are still above their 200-day moving average. So when you have good long-term trends and you get good flushed out short-term oversold conditions, that's typically a very viable cocktail that's present. What are 2 names we can use to take advantage of this here? I want to show you Hess first. And I think some perspective here is important. Now, Hess was up 160% since November. We've consolidated 15, 16% over the last couple months. It's now oversold. There is very good support in the low 70s. That's where we traded to on Monday morning. I think that is the zone, or that is the ballpark where this will bottom for the remainder of the year. I like adding to it here. And then lastly, we always joke, this is our favorite FANG in the index. This is ticker FANG. It's Diamondback is the stock, energy name. It's up 300% since November. It's come in 30 over the last couple months. So good long-term uptrend. It's been flushed in the short term, great support near 75. We're a buyer of this stock. So you kind of have all the ingredients coming together to get more aggressive in the energy sector, thinking about the next 6 months here.
Chris, just quickly while we have you, what's your next call on rates?
I think up. I think this week we put an important low in, holding that 110, 112 neighborhood. What you want to watch for is 129. If we go out tomorrow, Friday afternoon, close the week above 129, we would have made back the entire week of decline in rates. I think that's a very, very big reversal level here.
All right, Chris, great to see you. Thank you.
Thank you.
Chris Verrone of Strategas. I asked that question, Dan, because if you, and I say you, meaning Dan, Nathan, believe that rates could go lower or be lower or stay lower, can you believe in the energy trade?
Sure. I mean, listen, I don't think rates are going to go that much lower. I think you may see a break of that Tuesday low, and maybe you get somewhere just above 1%. Once we get by next week's Fed meeting, I think that all eyes are obviously going to be on Jackson Hole and any pivot and any hint towards a taper at some point late in the year. And I think rates are going to go up very quickly, and we may establish a new range above 1.5% in the 10-year U.S. Treasury yield. That being said, if rates go up too far, too fast, then I think crude oil has some problems. And we also see the dollar going, or at least very firm here with the Dixie just around 93. So, again, my point of view on the rate thing has been that it's been pointed to the fact that the recovery is not going to be linear. It's not going to be globally coordinated, and we're going to have fits and starts. And I think, crude got a little ahead of itself, and it corrected on money in a meaningful way. And it stopped right at that 2-year uptrend. So, should it hold? I hope it holds. If it doesn't hold, you have moved maybe back towards 60 in the not so distant future. So to me, the technicals are important here. I just don't think rates are a great press here. But I think if you see them take a move back towards 1%, I think they're going to start moving up rather precipitously as we get further into the summer close to Jackson Hole.
Guy, what do you think of the names Chris flagged?
Can I go off the charts for 500, please, Melissa? Because there is one that he didn't mention and I happen to like, and I know you hate it when we play our own reindeer games, but Halliburton, to me, sticks out like a sore thumb. Upgraded at Goldman Sachs to buy from neutral. I think a $26 price target, just reported earnings. held that 19 level, which was the April low. I think out of all the names, if you want to be an OIH, and Tim actually might agree with me on this one, I think Halliburton sets up really well.
Quickly, Tim, do you agree?
Agree with Guy. I think the best of breed in the space, which I still think there's not total conviction from broader investors, is Chevron, EOG, and I actually believe it's Schlumberger. Those are great balance sheets. Those are capital disciplined companies. And I think all the trends that Chris talked about could be played out through those three.
Shepard Smith here. Thanks for watching CNBC on YouTube.